Accounting plays a vital role in the decision-making process. Which action is the first step in the decision-making process? Identify the issue. Identify the alternatives. Guarantee a good outcome. Gather information. Identify the issue. Correct. Identifying the issue is the first step in the decision-making process. Investors, creditors, and retained business earnings. Correct. Investors, creditors, and retained business earnings are all common sources of capital for a business. True accountants measure and communicate the results of business activities. In other words, accountants keep score. To measure these results accurately, accountants follow a standard set of procedures referred to as the accounting cycle. Which group uses financial information to evaluate whether a company will be able to repay a loan? Investors, lenders, management, employees. Lenders. Correct. Lenders are interested in whether or not a company will be able to repay a loan, so they use financial information to analyze the company's financial ability to do so. Which primary area of accounting generates reports for internal users? Financial accounting, management accounting, general purpose accounting, governmental accounting. Management accounting. Correct. Management accounting generates reports for internal users, such as budgets and cost analyses. Which of the primary financial statements reports the resources, obligations, and owner's equity of a company? Income statement, statement of cash flows, master budget, balance sheet. Balance sheet. Correct. The balance sheet reports the resources of a company, the company's obligations, and the owner's equity, which represents the difference between what is owned and what is owed. What group of people make up the FASB? Senior SEC staff members, people from a variety of business-related backgrounds, financial accounting specialists appointed by the U.S. Congress, senior IRS staff members. The GASB is a private sector organization that establishes accounting and financial reporting standards for U.S. state and local governments. Correct. The GASB sets accounting standards for state and local governments in the United States. The company has not filed its taxes in accordance with the law. Correct. The role of the IRS is to ensure that tax filing complies with financial accounting standards. Financial reports. Correct. Financial reports are used by individuals and organizations that have an economic interest in the business. They provide information about the financial performance of a company. A company just released its public accounting data for 20X9. Which user of accounting information will monitor this data to ensure that the company is providing sufficient information for investors, customers, government agencies, company managers, lenders? Government agencies. Correct. This is the role of the SEC, a federal government agency. Evaluation. Correct. This is an example of evaluation. Implement professional sanctions. Correct. The AICPA can enforce professional sanctions by taking away the CPA designation from an accountant who has acted unethically. What is the correct summary sequence in the accounting cycle? Analyze, record, summarize, prepare, prepare, record, analyze, summarize, prepare, summarize, record, analyze, summarize, prepare, record, analyze. Analyze, record, summarize, prepare. Correct. This is the proper sequence in the accounting cycle. To confirm that a transaction has occurred. Correct. Important purposes of business documents are to confirm that a transaction has occurred, to establish the amounts to be recorded, and to facilitate the analysis of business events. to turn transactions into financial statements and provide useful financial information for decision makers. Correct. This is the purpose of the financial accounting cycle. An interaction in which two parties exchange something of value. Correct. This is the definition of a transaction. What is an arm's length transaction? An exchange between two independent parties, an exchange of cash for some other asset, an exchange of inventory for employee wages, an exchange between two related parties. An exchange between two independent parties. Correct. This describes an arm's length transaction. Which event represents a transaction recorded as part of the financial accounting cycle? The company's press release announcing a new factory, the marketing department's press release about a new product, the hiring of a new employee, the sale of a product for cash or on account. The sale of a product for cash or on account. Correct. The sale of a product is an external transaction and is recorded on a company's books. A company sells a product to a customer on account. Which part of the accounting equation does this particular transaction change? Both assets and liabilities. Liabilities only, assets only. Both assets and owner's equity. Both assets and owner's equity. Correct. This transaction changes both assets and owner's equity to keep the accounting equation in balance. What is an example of an internal transaction? A company pays rent to its landlord. An employee purchases supplies from another company. An employee is transferred from one department to another. A company sells goods to a customer. An employee is transferred from one department to another. Correct. An internal transaction occurs within the company instead of with an external party, and it is not recorded in the company's books. Analyze transactions. Correct. This is the first step of the financial accounting cycle. Which item is a liability? Cash, buildings, mortgage, inventory. Mortgage. Correct. A mortgage involves the purchase of a resource that requires repayment. Which of the items listed should Oliver record as an external transaction? Transfers of cash from one department to another, announcement of the building of a new facility, purchases of inventory from suppliers, payments of wages to employees. Purchases of inventory from suppliers. Correct. An external transaction is one that occurs between a company and an external party, such as a supplier. Add up the balances in all of the asset accounts and compare them to the sum of all the liability and owner's equity accounts. Correct. Because assets equals liabilities plus owner's equity, this is the correct way to determine the equality of the accounting equation. Cash and a liability account both increase. Correct. This transaction brings more cash into the company by increasing the company's liability to the bank. Which account is an example of a liability? Inventory, accounts receivable, accounts payable, equipment. Accounts payable. Correct. Accounts payable is a liability because it represents resources that require repayment. Which of the primary financial statements reports the amount of cash collected and paid out by a company? Income statement, statement of cash flows, balance sheet, statement of ledger balances. Statement of cash flows. Correct. This statement of cash flows is one of the three primary financial statements. This statement of cash flows reports the amount of cash collected and paid out by a company in the following three types of activities: operating, investing, and financing. What is the name for the authoritative set of accounting standards in the United States? GAAP, IRS, GAAP, FASB. GAAP. Correct. This stands for Generally Accepted Accounting Principles. Which statement is a correct description of the IASB? It is a subcommittee of the U.S. Congress. It has legal authority to establish financial accounting standards for U.S. companies. It works under the direction of the Secretary. It establishes international accounting standards. Which action is part of the financial accounting cycle? Summarizing financial information in financial statements, recording the hiring of a new employee, making business decisions based on financial information, preparing a company's budget. Summarizing financial information in financial statements. Correct. Collecting, analyzing, and summarizing financial information are the main processes in the financial accounting cycle. What is owner's equity? The remaining claim to the assets of a business after liabilities have been deducted, an obligation that owners of a company must pay for the value available to owners created through the sale of goods and services, an economic resource that is owned by a company. The remaining claim to the assets of a business after liabilities have been deducted. Correct. This is the definition of owner's equity. Most businesses have a systematic method for analyzing transactions and collecting and recording transaction-related information. This transformation process is which part of accounting? The bookkeeping process, the accounting cycle, the evaluation of financial data, the publication of raw data. The accounting cycle. Correct. This is the definition of the accounting cycle. Which event is an example of collecting, analyzing, and summarizing accounting information? Taking out a loan from the bank, gathering checkbook information, shopping online at Amazon, checking advertisements in the newspapers. Gathering checkbook information. Correct. Gathering checkbook information involves collecting, analyzing, and summarizing transactions. Which accounting transaction should be recorded in the books and the records of a company? Placing an employment advertisement online, purchasing new equipment for the company, developing a marketing plan for a new product line, announcing the opening of a new manufacturing facility in China. Purchasing new equipment for the company. Correct. This is an example of a transaction because there is an exchange of value. Which event is a transaction? Purchasing an item on the internet from an online store, going to two different stores to compare the price of a vacuum, getting a quote on a new TV from an electronics store, going to the store to check the prices on some clothes you wish to purchase. Purchasing an item on the internet from an online store. Correct. This is a transaction because an exchange of value has taken place. Purchasing new equipment from a manufacturer. Correct. This is an example of an external transaction and helps the company acquire resources. Which account is an example of an asset? Accounts receivable, accounts payable, unearned revenue, retained earnings. Accounts receivable. Correct. Accounts receivable is an asset account. Accountants have a moral incentive to conduct themselves ethically. Correct. Accountants are trusted to provide reliable and trustworthy financial information. At some point in my career, I will need to use accounting information to make business decisions. Correct. At some point in your career, you will be glad that you understand the principles of accounting as you make important business decisions. How do revenues and expenses fit into the accounting equation? Expenses increase owner's equity. Revenues minus expenses equals net income, which is part of owner's equity. Revenues decrease owner's equity. Expenses minus revenues equals net income, which is part of owner's equity. Revenues minus expenses equals net income, which is part of owner's equity. Correct. The accounting equation is assets equals liabilities plus owner's equity. What is the name of the account that shows the distribution of net income to the owners of a business? Owner's equity. Dividend, liabilities, inventory. Dividends. Correct. Dividends show the distribution of net income to the owners of a business. A transaction involving the payment of dividends to the owners reduces which part of the accounting equation? Revenues, owner's equity, expenses, assets. Owner's equity. Correct. The payment of dividends reduces owner's equity. Which event is an example of an internal transaction? A company hires a new employee. A company borrows money from a bank. A company buys inventory from a supplier. A company sells a product to a customer. A company hires a new employee. Correct. This transaction takes place within a company and would not be recorded on the books. Your company purchases new equipment for cash, which accounts are increased and decreased as a result of this transaction. Equipment increases and cash decreases. Accounts payable increases and equipment decreases. Cash increases and equipment decreases. Equipment increases and inventory decreases. Equipment increases and cash decreases. Correct. Equipment increases when equipment is purchased and cash decreases when cash is used to pay for the equipment. The accounting equation must always remain in balance after recording a transaction. Correct. This is the fundamental rule of the accounting equation. The U.S. government agency charged with regulating financial markets and ensuring the availability of reliable financial information. Correct. This is the role of the SEC. Which resource or tool is used to identify unique companies in the SEC's 10K filing database? Code of Federal Regulations. Edgar. Central Index Key. Securities Exchange Act. Central Index Key. Correct. The Central Index Key is a unique identifying number for each company in the SEC's Edgar system. How often is the Form 10Q filed? Monthly, quarterly, weekly, annually? Quarterly. Correct. The Form 10Q is filed with the SEC quarterly. The Form 10K is filed with the SEC annually. How often is the Form 10K filed? Annually, quarterly, weekly, monthly? Annually. Correct. The Form 10K is filed annually with the SEC at the end of the fourth quarter each year. Many assets are recorded at cost and some economic assets are not recorded at all. Correct. The balance sheet does not reflect the current value or worth of a company because many assets are recorded at cost and some economic assets are not recorded at all. A balance sheet portrays the financial condition of a company at a point in time. Correct. This describes the elements and purposes of a balance sheet. The residual amount representing the net assets available to another party after all obligations have been satisfied. Correct. Owner's equity is the net assets left after obligations have been satisfied. What information should be included on the balance sheet? Income and expenses, financing cash flows, operating cash flows, assets and liabilities. Assets and liabilities. Correct. Assets and liabilities should be included on the balance sheet along with owner's equity. What is net income? The amount by which revenues exceed expenses, the amount of assets consumed through business operations, the total amount of assets reported in the balance sheet, the amount of cash on hand at the end of the year. The amount by which revenues exceed expenses. Correct. Net income is the amount by which revenues exceed expenses. What is a gain? Making money from an excess of total revenues over total expenses. Making money from an activity that is part of the normal activities of a business. Making money from an excess of sales over cost of goods sold. Making money from an activity outside the normal activities of a business. Making money from an activity outside the normal activities of a business. Correct. A gain is making money from an activity outside the normal activities of a business. A report of the revenues and expenses of a company during a period. Correct. A report of the revenues and expenses of a company during a period is an income statement. Revenues minus expenses equal net income. A statement of retained earnings portrays the accumulated profits or losses of a company at a point in time. Correct. A statement of retained earnings portrays accumulated profits or losses of a company at a point in time. Which of these activities is an investing activity? Selling goods, paying wages, repaying loans, buying buildings. Buying buildings. Correct. Buying buildings is an investing activity. Which of these activities is an operating activity? Repaying loans, selling land, selling goods, buying buildings. Selling goods. Correct. Selling goods is an operating activity. A report of the operating, investing, and financing cash flows of a company over a period of time. Correct. A statement of cash flows is a report of the operating, investing, and financing cash flows of a company over a period of time. Because one summary number in the financial statements represents literally thousands of individual items. Correct. The notes contain additional information about summary totals because one summary number in the financial statements represents literally thousands of individual items. Because accounting involves making assumptions, estimates, and judgments. Correct. The financial statement notes contain a summary of significant accounting policies because accounting involves making assumptions, estimates, and judgments. The notes to the financial statements. Correct. The notes to the financial statements contain information about accounting policies and practices. A classified balance sheet distinguishes between current and long-term assets. Correct. A classified balance sheet is a balance sheet that distinguishes between current and long-term assets. Which item would be classified in the owner's equity section of the balance sheet? Inventory, retained earnings, accounts payable, accounts receivable. Retained earnings. Correct. Retained earnings is an owner's equity item representing the cumulative amount of profits that the owners have kept in the business in order to buy assets. So, retained earnings is a source of money to buy assets. The notes present the assumptions needed to help explain financial statements. Correct. This is the purpose of the notes to the financial statements. How would Camilla calculate operating income, sales, cost of goods sold, operating expenses, cash, accounts payable, cash, inventory, sales, operating expenses, accounts payable? Sales, cost of goods sold, operating expenses. Correct. This is the calculation for operating income. How would Camilla calculate gross profit, cash, inventory, sales, cost of goods sold, sales, operating expenses, cash, accounts payable? Sales, cost of goods sold. Correct. This is the calculation for gross profit. Examining both the relationships among financial statement numbers and the trends in those numbers over time. Correct. This is the definition of financial statement analysis. By dividing all income statement amounts for a given year by sales for that year. Correct. This is how a common size income statement is created. To highlight trends that may be occurring in the company over time. Correct. The major purpose of horizontal analysis is to highlight trends, both positive and negative, that may be occurring over time in revenues and expenses. For example, displaying each line item as a percentage of another for comparison to other companies in the industry. Correct. This is the definition of vertical analysis. It tells you what questions you need to be asking about a company's performance. Correct. Vertical analysis should help you come up with further questions to ask about a company's performance as compared to other companies. Which types of companies can be compared using vertical analysis? Companies of the same size, companies that provide the same types of goods or services, companies started around the same time, companies with the same amount of sales. Companies that provide the same types of goods or services. Correct. Vertical analysis should only be used for companies in the same industry. Vertical analysis allows an accountant to determine how expenses are changing relative to which line item on the income statement: total sales, total assets, total liabilities, total owner's equity. Total sales. Correct. Examining trends over time of each line item as a percentage of sales helps an accountant determine how the company is performing relative to other companies in the industry. $248,400, 56% x $885,000 equals $495,600. Cost of goods sold in 20x2, or $74,400 lower than it was in 20x1. If we add the $74,400 to the income before taxes, the result would be $248,400. The company's increase in COGS is hurting its profitability. The increase in COGS was larger than sales in terms of percentage, so this is definitely hurting the company's profitability. Each amount is expressed as a percentage of sales for the year. Correct. In a common size income statement, each amount is expressed as a percentage of sales for the year. Which item listed below is an asset? Accounts receivable, capital stock, retained earnings, accounts payable. Accounts receivable. Correct. Accounts receivable is the amount owed to a company that sold goods or services to a customer on credit. An obligation to pay cash, transfer other assets, or provide services to someone else. Correct. This is the definition of a liability. What is the definition of revenue? The total of cash, accounts receivable, and inventory, the amount of assets consumed through business operations, the amount of assets created through the sale of goods and services, the amount of cash on hand at the end of the year. The amount of assets created through the sale of goods and services. Correct. This is the definition of revenue. Which item below is an expense item? Sales, accounts payable, cash, cost of goods sold. Cost of goods sold. Correct. Cost of goods sold represents the amount of inventory consumed through business operations, giving the inventory to the customer in a sales transaction. Those activities that are part of the day-to-day business of a company. Correct. Operating activities are those activities that are part of the day-to-day business of a company. A balance sheet is a report of the assets, liabilities, and equity of a company as of a point in time. Correct. The balance sheet reports the resources of a company, the company's obligations, and the difference between what is owned and what is owed, called owner's equity. A statement of cash flows portrays the operating, financing, and investing cash flows of a company over a period of time. Correct. A statement of cash flows portrays the operating, financing, and investing cash flows of a company over a period of time. Management should be concerned about the increase in cost of goods sold from 20x1 to 20x2. The growth in COGS exceeded the growth in sales. This is a dramatic increase, and management must figure out what is going on. Keep the percentage of sales for cost of goods sold constant from 20x1. Reducing the cost of goods sold from 71.67% to 53.57% will reduce costs enough to make the net income positive. When is vertical financial statement analysis most valuable? When looking across time to see how relationships are changing when comparing companies in similar industries, when comparing companies in different industries, when looking for final answers to your financial statement analysis questions. When comparing companies in similar industries. Correct. Vertical analysis is most valuable when comparing companies in similar industries. Which section of the SEC's website contains company annual report on Form 10-K filings? Central Index Key. EDGAR, Securities Exchange Act, Code of Federal Regulations. EDGAR. Correct. EDGAR stands for Electronic Data Gathering, Analysis, and Retrieval. Which item below is a liability? Accounts payable, capital stock, accounts receivable, retained earnings. Accounts payable. Correct. Accounts payable is the amount owed as a result of the purchase of goods and services on credit. What is an asset? An economic resource that is owned or controlled by a company. The sum of operating, investing, and financing cash flows, the residual amount representing the net amount available after all obligations have been satisfied, an obligation to pay cash or provide services to someone else. An economic resource that is owned or controlled by a company. Correct. An asset is an economic resource that is owned or controlled by a company. What is the definition of expense? The amount of assets created through the sale of goods and services. The amount of bank loans repaid during the year. The amount of bank loans obtained during the year. The amount of assets consumed through business operations. The amount of assets consumed through business operations. Correct. Expense is the amount of assets consumed through business operations. Which item below is a revenue item? Cash, accounts receivable, loan payable, sales. Sales. Correct. Sales represents the amount of assets created through selling products to customers. Those activities whereby cash is obtained from or repaid to owners and creditors. Correct. Those activities whereby cash is obtained from or repaid to owners and creditors are financing activities. An income statement portrays the results of operations of a company over a period of time. Correct. This is the purpose of the income statement. What factors below contribute to a company's pattern of cash collections? Available for sale securities and bond rating, loan covenants and off-balance sheet financing, industry, firm size, and the firm's credit policies, factory productivity and dividend policy. Industry, firm size, and the firm's credit policies. Correct. The collection pattern for receivables is a function of such factors as industry, firm size, and the firm's credit policies. In what way does a cash budget allow a manager to take action now? It allows the manager to identify cash shortages in advance. It can verify a company's compliance with loan covenants. It allows for both horizontal and vertical analysis. It satisfies government regulatory requirements. It allows the manager to identify cash shortages in advance. Correct. Through identifying cash shortages in advance, a cash budget allows a manager to take action now. Actions such as making advance arrangement for loans. According to a company's cash budget, when can management plan to repay the company's loans? When forecasted cash deficits are highest, when the aging of accounts receivable is available, when forecasted cash surpluses are lowest, when excess cash is available. When excess cash is available. Correct. By knowing when cash deficits and surpluses are likely to occur, management can plan to borrow cash when needed and repay these loans when excess cash is available. What are the principal sources of a company's cash inflows? Income tax refunds, cash sales and the collection of cash from prior credit sales, selling of old land and buildings, dividend payments to shareholders. Cash sales and the collection of cash from prior credit sales. Correct. Cash sales and the collection of cash from current and past sales made on credit are the principal sources of cash inflows. For what purpose are column charts used? To compare different categories of items or the same category over time, to decompose categories into smaller common segments for comparison, to compare subcategories of items within a category, to assess the trends within the same category of a data set. To compare different categories of items or the same category over time. Correct. Column charts are useful for comparing different categories of items or the same category over time. An analysis of past cash flow patterns to reveal the expected timing of future cash collections. Correct. An aging schedule reveals the timing of past cash flow collections to aid in budgeting future cash collections. Past patterns of a company's cash collections and cash disbursements. Correct. A company can use past patterns of a company's cash collections and cash disbursements to create a forecast or budget of expected future cash inflows and outflows. The master budgeting process begins with which forecast? A forecast of sales, a forecast of production, a forecast of direct materials, a forecast of direct labor. A forecast of sales. Correct. The master budget begins with a forecast of sales. The sales and administrative expense budget includes which expenses? All expenses besides production-related expenses, direct materials and direct labor expenses, manufacturing overhead expenses, all expenses including production-related expenses. All expenses besides production-related expenses correct. The sales and administrative expense budget includes all expenses except those that are production-related. The manufacturing overhead cost budget includes which manufacturing costs? Direct materials, both fixed and variable manufacturing overhead costs, direct labor, variable manufacturing overhead costs only. Both fixed and variable manufacturing overhead costs correct. The manufacturing overhead budget includes all production costs other than direct materials and direct labor. The production budget supplies the information required for which other budget in the master budgeting process: sales budget, direct materials budget, inventory budget, selling and administrative expense budget. Direct materials budget correct. The production budget supplies information for the direct materials budget, direct labor budget, and manufacturing overhead budget. Segment managers should be evaluated on which items included in a budget: only the items they cannot control or influence, only the items they can control or influence, only the segment liabilities, only the segment assets. Only the items they can control or influence correct. Segment managers should be evaluated on only the items they can control or influence. The difference between segment revenue and direct segment costs correct. Segment margin is the difference between segment revenue and direct segment costs. Which items does a manager have control over in a cost center? Revenues only, revenues and assets, costs and revenues, costs only. Costs only correct. A cost center manager has control over costs only. Which items does a manager have control over in a profit center? Revenues and assets, costs and revenues, costs only, revenues only. Costs and revenues correct. A profit center manager has control over costs and revenues. A manager should be evaluated only on factors he or she can directly control. Correct. Responsibility accounting holds that a manager should only be responsible for the factors that he or she can control. What is the first thing an accountant should do to develop a master budget? Prepare a sales budget, prepare a cash flow budget, prepare a direct labor budget, prepare a production budget. Prepare a sales budget correct. The first step in developing a master budget is to prepare a sales budget. Projected sales volume correct. Factors to be considered in preparing a production budget are the projected sales volume for the period, the desired amount of ending inventory, and the amount of inventory already on hand in the beginning inventory. A cost variance is the difference between the actual cost and the budgeted cost. Correct. A cost variance is the difference between actual costs and budgeted costs. Projected sales, desired ending inventory, and amount of beginning inventory correct. Projected sales, desired ending inventory, and the amount of beginning inventory should be considered in assembling a production budget. She should include only controllable costs in the measure. Correct. It is important that managers be held responsible only for controllable costs and not for uncontrollable costs. What is the correct sequence of budgets in a manufacturing business? Sales, production, direct labor, sales, direct labor, production, cash flow, production, sales, direct labor, cash flow, sales, production, direct labor. Sales, production, direct labor correct. The first step in developing a master budget is to prepare a sales budget in a manufacturing business. The next budget is the production budget, which can then be used to create the direct labor judge. What is one important factor to consider when preparing a production budget? Amount of beginning inventory, desired payroll tax strategy, intensity of competition, government policy impact. Amount of beginning inventory correct. Factors to be considered in preparing the production budget are the projected sales volume for the period, the desired amount of ending inventory, and the amount of inventory already on hand in the beginning inventory. Only after production quantities are known. Correct. Only after production quantities are known can management determine the amount of direct materials, direct labor, and manufacturing overhead needed during the period. What problem can occur if inventories are too high? Delay of production process, high allocated rental cost per unit, direct labor, workers with no work to do, excessive storage costs. Excessive storage costs. Correct. If management does not maintain sufficient materials inventory levels, the production process could be held up. If inventories are too high, inventory investment and storage costs could get out of control. In which budget should the depreciation of administrative office buildings be included? Cash budget, fixed production cost budget, selling and administrative expense budget, production equipment depreciation budget. The amount by which the actual cost differs from the budgeted cost. Correct. Actual costs are compared with the budgeted cost to calculate the cost variance. The amount by which the actual cost differs from the budget. What label is given to a business unit in which the manager is responsible for costs and revenues only? Profit center, cost center, operating center, investment center. Profit center. Correct. In a profit center, the manager is responsible for costs and revenues. Desired amount of ending inventory each month. Correct. Factors to be considered in preparing the production budget are projected sales volume for the period, the desired amount of ending inventory, and the amount of inventory already on hand in the beginning inventory. Amount of beginning inventory. Correct. Factors to be considered in preparing the purchases budget are projected production for the period, the desired amount of ending inventory, and the amount of inventory already on hand in the beginning inventory. Including uncontrollable costs in the performance evaluation measure of segment B. Correct. It is important that managers be held responsible only for controllable costs and not for uncontrollable costs. What is the meaning of a significant cost variance? Corrective action should be taken to eliminate the variance. Profit for the period will be higher than expected. Budgeted supplier payments should be delayed or withheld altogether. Operating profit is impacted by administrative expenses. Corrective action should be taken to eliminate the variance. Correct. A cost variance, if significant, is a signal to management that costs may be out of control and that corrective action should be taken to eliminate the variance. An organizational unit in which a manager has responsibility for both costs and revenues. Correct. A profit center is an organizational unit in which a manager has responsibility for both costs and revenues. What is an indirect cost? A cost that a segment manager cannot control, a cost that is different from the budgeted cost, a cost that is billed to another organizational unit, a cost that a segment manager can control. A cost that a segment manager cannot control. Correct. The costs a segment manager cannot control are called indirect costs. What is capital budgeting? Planning for the acquisition of property, plant and equipment, planning for how to obtain short-term financing, planning for how to obtain shareholder investment, planning for how to market products. Planning for the acquisition of property, plant, and equipment. Correct. Capital budgeting is the planning for the acquisition of property, plant, and equipment, which are also called capital expenditures. Projecting accurate sales is very difficult because sales are a function of both uncontrollable external variables and controllable internal variables. Which variable below is an uncontrollable external variable? Advertising expenditures, sales effort, customer tastes, selling price. Customer taste. Correct. Customer tastes are uncontrollable and external to a company. There are three important factors to be considered in preparing a production budget. Which item below is one of those factors? Desired payroll tax strategy, desired supplier cash payment schedule, desired mix between rental and lease charges, desired amount of ending inventory. Desired amount of ending inventory. Correct. The desired amount of ending inventory should be considered in preparing a production budget. What label is given to a business unit in which the manager is responsible for costs, revenues, and assets? Profit center, operating center, cost center, investment center. Investment center. Correct. In an investment center, the manager is responsible for costs, revenues, and assets. Projected sales. Correct. Factors to be considered in preparing the production budget are projected sales volume for the period, the desired amount of ending inventory, and the amount of inventory already on hand in the beginning inventory. Revenues and controllable costs. Correct. A profit center manager has responsibility for both costs and revenues. Accordingly, profit center performance evaluation measures should be based on revenues and controllable or direct costs. Managerial accounting data are created based on competitive needs that are unique to the organization. Correct. Managerial accounting can be a competitive tool. Management accounting information is composed of both financial and non-financial data. Correct. Management accounting deals with both financial and non-financial data. Which group represents the primary users of managerial accounting information? Customers, managers, bankers, public stockholders. Managers. Correct. Managers are the primary users of managerial accounting information. Company managers are important users of managerial accounting information. What are the three primary functions of company managers? Operating, investing, and financing. Planning, controlling, and evaluating. Budgeting, spending, and negotiating. Borrowing, repaying, and investing. Planning, controlling, and evaluating. Correct. The three functions of management are planning, controlling, and evaluating, and these functions generally follow this natural sequence. Financial accounting information is prepared according to a generally accepted set of rules. Correct. Financial accounting information is prepared according to GAAP. Which activity involves the process of tracking the actual performance of a company, controlling short-run planning, evaluating long-run planning. Controlling. Correct. Controlling means tracking the actual performance of a company. What does long-run planning include? Production and process prioritizing, operational budgeting and profit planning, strategic planning and capital budgeting, production prioritizing and profit planning. Strategic planning and capital budgeting. Correct. Long-run planning includes strategic planning and capital budgeting. Which type of business is a typical retailer? Merchandising business, non-profit business, manufacturing business, service business. Merchandising business. Correct. A retailer is a good example of a merchandising business. A retailer does not add value to the inventory itself but instead simply buys the inventory from a wholesaler and then resells it to the final customer as is. Which types of costs does a merchandiser have? Product costs only, both product and period costs, neither product nor period costs only. Both product and period costs. Correct. Merchandisers have both product and period costs. Which types of costs does a manufacturer have? Period costs only, both product and period costs, product costs only, neither product nor period costs. Both product and period costs. Correct. Manufacturers have both product and period costs. Which type of business purchases finished goods for resale? Merchandising, manufacturing, service, non-profit. Merchandising. Correct. A merchandising business purchases inventory from suppliers for resale to customers. Managerial accounting includes budget and forecast data. Correct. Managerial accounting data include budget and forecast data. Lucas works for a professional consulting firm. He has been asked to compare his firm's financial performance to the performance of another firm. Which company should Lucas use as a benchmark for his company's performance? A law firm, a grocery store, a consulting firm, a car dealership? A consulting firm, correct. Lucas should use a firm that provides a similar service to his business to use as a benchmark. Maria just started a cosmetics company. She purchases makeup and nail polish from a wholesale distributor and sells these products on social media. Which costs will Maria's new company have? Neither product nor period costs, only product costs, only both product costs and period costs. Both product costs and period costs, correct. Maria's company is a merchandising organization, and merchandising organizations have both product and period costs. Jack just started a business that develops websites for other businesses. Which type of organization is Jack's new business? Non-profit organization, service organization, merchandising organization, manufacturing organization? Service organization, correct. A service business is any organization whose main economic activity involves performing an activity for or providing a non-physical product to a customer. All manufacturing costs that are not classified as direct materials or direct labor, correct. Manufacturing overhead includes all manufacturing costs that are not classified as direct materials or direct labor. What is work in process inventory? All material that has been sold to customers but not yet recorded. All material that is segregated in the finished goods warehouse. All rejected material that is segregated in the raw materials warehouse. All material on the factory floor that is not yet completed. All material on the factory floor that is not yet completed, correct. All material on the factory floor is referred to as work in process inventory until the production process is completed. What type of cost are the wages paid to a factory supervisor? Selling, general, and administrative, direct labor, direct materials, manufacturing overhead. Which item is a period cost? Direct labor, direct materials, wages of secretarial staff, factory maintenance worker wages. Wages of secretarial staff, correct. A product cost is a cost directly associated with production activity. A period cost is a cost that is incurred outside the production facility. Which item is a product cost? Direct materials, advertising costs, sales and marketing salaries, CEO and other executive salaries. Direct materials, correct. Direct materials is a product cost because it is directly associated with production activity. Which product costs are substantial in both a service company and a manufacturing company? Direct labor and selling costs, direct labor and overhead and general costs, direct materials and administrative costs. Direct labor and overhead, correct. Both service companies and manufacturing companies have a lot of direct labor and overhead. Cost of goods sold, correct. A law firm is a service firm. A service firm that does not deal with any parts or merchandise does not require a cost of goods sold section on the income statement because the firm does not sell any goods. An increase in work in process inventory, correct. When raw materials are moved to the production floor, they become work in process inventory. Wages of the janitors in the executive office building, correct. Product costs are costs associated with activities in the manufacturing facilities. Because the janitors in the executive office building do not work in the factory, their wages are not a product cost but a period cost. Bonuses paid to the phone assemblers who work on the production line, correct. Period costs are incurred outside the factory. The only product cost in the list is the cost of the bonuses paid to the phone assemblers who work inside the factory. A fixed cost is fixed in total and decreases per unit as the number of units increases. Correct. A fixed cost is fixed in total and decreases per unit as the number of units increases because that constant fixed cost is spread over more units as the number of units increases. The range of volume over which the variable cost per unit is expected to remain the same. Correct. The relevant range is the range over which the variable cost per unit stays the same and the fixed cost remains the same in total. Total variable costs change in relationship to the volume of activity. Correct. Total variable costs are directly related to the volume of activity. Total fixed costs do not change in total within a relevant range of activity. Correct. Total fixed costs do not change unless production goes outside the relevant range of activity. What must be true of a direct cost? It is a cost incurred outside the production facility. It is a cost traceable to a specific business unit. It is a cost that changes in proportion with changes in liabilities. It is a cost in the future that can be changed by decision today. It is a cost traceable to a specific business unit. Correct. Direct costs are costs that can be obviously and physically traced to a business unit or segment being analyzed. It is a cost that cannot be traced to a specific business unit or product. Correct. Indirect costs are costs that cannot be traced to a specific business unit or product. The total cost of goods sold will be understated. Correct. Underapplied overhead causes the total cost of jobs to be understated. Contribution margin analysis helps management evaluate whether to continue selling a product. Correct. This is an important use of contribution margin analysis. Which statement is true at the break-even point? Total revenues equal total costs. Total variable costs equal total fixed costs. Total revenues equal total fixed costs. Total revenues equal total variable costs. Total revenues equal total costs. Correct. At the break-even point, total revenues equal total costs. What is true if the quantity sold for a product line is below the break-even point? The product line is operating at a profit. The product line is operating at a loss. Total revenues must be greater than total costs. Total variable costs must be greater than total fixed costs. The product line is operating at a loss. Correct. If the quantity sold is below the break-even point, the company has not made enough money to cover the costs of production. What are differential costs? Future costs that are common among all decision alternatives. Past costs that cannot be changed by a current decision. Past costs that are different from budgeted amounts. Future costs that change as the result of a decision. Future costs that change as the result of a decision. Correct. The differential costs of a decision, sometimes called avoidable costs, incremental costs, or relevant costs, are the future costs that change as a result of that decision. What are sunk costs? Past costs that are different from budgeted amounts. Past costs that cannot be changed by a current decision. Future costs that are common among all decision alternatives. Future costs that change as the result of a decision. Past costs that cannot be changed by a current decision. Correct. A sunk cost is a past cost that cannot be changed by a current decision. What is an example of an indirect cost in a hospital? Salary of a doctor assigned to a patient. Utility costs for the hospital building and for needed during a surgical procedure. Drugs administered to a patient. Utility costs for the hospital building. Correct. Utility costs are a good example of an indirect cost in any organization. Which statement is true at the break-even point? Variable costs. Fixed costs equal $0. Variable costs exceed fixed costs. Fixed costs exceed variable costs. Sales revenue. Variable costs. Fixed costs equal $0. Sales revenue. Variable costs. Fixed costs equal $0. Correct. At the break-even point, target income equals $0. What is the formula for the contribution margin? Sales revenue, fixed costs, sales revenue, variable costs, sales revenue, fixed costs, variable costs. Sales revenue, variable costs. Correct. This is the formula for contribution margin. 36,667 units. So the company reported the following data. Price per unit equals $10, variable cost per unit equals $7, fixed cost equals $1,500. Given these data, compute the break-even number of units. 88 units, 214 units, 500 units, 612 units. 500 units, $1,500, fixed cost / equals 500 units. Estimated overhead costs divided by estimated level of activity. Correct. The predetermined overhead rate is created by dividing estimated overhead by the estimate of the expected level of activity to be used to allocate overhead during the year. 3,000 units. $666,667. Variable. Correct. Variable costs always increase directly when a new subscriber is added to the cable subscriber base. 25%. Managerial accounting data are created based on competitive needs that are unique to the organization. Correct. It is important to remember that a company's managerial accounting information system is potentially a competitive tool. What are the three components of product costs? Budget, actual, and variance. Selling, general, and administrative. Operating, investing, and financing. Direct materials, direct labor, and manufacturing overhead. Direct materials, direct labor, and manufacturing overhead. Correct. The three components of product cost are direct materials, direct labor, and manufacturing overhead. What is a mixed cost? A cost that includes both the financial portion and the managerial portion. A cost that includes both overhead costs and direct materials costs. A cost that includes both a relevant range and an irrelevant range. A cost that includes both a fixed portion and a variable portion. A cost that includes both a fixed portion and a variable portion. Correct. A mixed cost is a cost that includes both a fixed portion and a variable portion. What problem will be caused if overhead is underapplied? Total cost of products or orders will be understated. Total cost of products or orders will be overstated. Total selling price of products or orders will be overstated. Total cash flow will be overstated. Dolphin Company reported the following data. Price per unit equals $10, variable cost per unit equals $7, fixed cost equals $1,500, number of units sold equals 1,000 units. Given these data, compute contribution margin per unit. $1.50, $1, $3, $2. $3. Correct. Contribution margin per unit equals price per unit, variable cost per unit equals $10 - $7 equals $3. $19 per unit. Camel Company reported the following data. Price per unit equals $20, fixed cost equals $6,000, variable cost per unit equals $11. Compute the contribution margin per unit for Camel Company. $8, $7, $6, $9. $9. Correct. Contribution margin per unit equals $20, price per unit - $11, variable cost per unit equals $9. What is an opportunity cost? Variable costs only, fixed costs only, direct labor plus direct materials. Revenue lost from selecting a different alternative. Revenue lost from selecting a different alternative. Correct. Opportunity costs are the benefits lost or forfeited as a result of selecting one alternative course of action over another. How is contribution margin calculated? Sales minus fixed cost, sales minus variable cost, fixed cost minus sales, variable cost minus fixed cost. Sales minus variable cost correct. Contribution margin is equal to sales revenue less variable costs. Contribution margin is the amount of revenue that remains to cover fixed costs and provide a profit for an organization. $100,000 correct. Since the Robert Company is at break-even sales revenue of $250,000 and fixed costs are $150,000, variable costs must be $250,000 $100,000 equals $150. Which statement describes managerial accounting used primarily by investors and creditors, compares planned and actual results, focuses on preparing three primary financial statements, emphasizes compliance with generally accepted accounting principles? Compares planned and actual results correct. Managerial accounting includes planned results and comparisons of planned and actual results. The financial statements do not include planned results. What are the three categories of manufacturing costs? Direct materials, direct labor, and manufacturing overhead. Budget, actual and variance. Selling, general and administrative. Operating, investing, and financing. Direct materials, direct labor, and manufacturing overhead correct. The three categories of manufacturing cost are direct materials, direct labor, and manufacturing overhead. Garcia Company reported the following data. Price per unit equals $10, variable cost per unit equals $7, fixed cost equals $1,500, number of units sold equals 700 units. Given these data, compute the contribution margin per unit. $3 per unit, $2 per unit, $1.50 per unit, $2.50 per unit. $3 per unit correct. Contribution margin equals price per unit of $10 less the variable cost per unit of $7 equals $3 contribution margin per unit. Torrey Company reported the following data. Price per unit equals $20, fixed cost equals $6,000, break-even number of units equals 1,000 units. Given these data, compute the variable cost per unit. $12 per unit, $14 per unit, $10 per unit, $16 per unit. VC equals $14 per unit. Designate VC as the variable cost per unit. $6,000 fixed cost slash equals 1,000, break-even number of units. VC equals $20. Selling price per unit. VC equals $14 per unit. Michael Company reported the following data. Price per unit equals $10, variable cost per unit equals $7, fixed cost equals $3,300. Given these data, compute the break-even number of units. 1,100 units, 1,212 units, 814 units, 688 units. 1,100 units correct. $3,300 fixed cost slash equals 1,100 units. What are sunk costs? Differential costs. Fixed costs relative to production volume. Budgeted costs included in general expenses. Past costs that cannot be changed. Past costs that cannot be changed correct. Sunk costs are past costs that cannot be changed as a result of a future decision. These data are for Charlotte Morton Company. Sales revenue $500,000, variable cost $420,000, break-even number of units 100,000. Calculate the total fixed costs when Charlotte Morton sells 100,000 units. $80,000, $420,000, $50,000, $10,000. $80,000 equals X. Let X equals fixed costs, sales revenue, variable costs. Fixed costs equals $0, $500,000, $420,000. X equals $0, $500,000, $420,000 equals X. $80,000 equals X. These data are for Ren Miller Company. Total sales revenue $250,000, number of units sold $100,000, variable costs $100,000, fixed costs $50,000. Calculate the total contribution margin. $50,000, $100,000, $150,000, $0. $150,000 correct. Contribution margin equals total sales revenue less variable costs equals $250,000 $100,000 equals $150,000. A system in which manufacturing costs are accumulated by separate product orders or batches. Correct. A job order costing system is one in which manufacturing costs are accumulated by separate product orders or batches. When a company produces products or services in a continuous process in which jobs or products or projects can't be specifically identified. Correct. Job order costing is not appropriate when a company produces large volumes of products or services using a series of uniform processes. In a job order costing system, how are factory supervisor wages classified? Administrative expense, selling expense, direct labor, manufacturing overhead. Manufacturing overhead. Correct. Manufacturing overhead includes all manufacturing costs that are not classified as direct materials or direct labor. This includes wages for the factory supervisor. A cost associated with activities occurring outside the factory. Correct. Period costs are costs associated with activities or facilities outside the factory. Period costs are reported as an expense in the period in which they occur. Overhead is allocated based on several different measures of activity. Correct. With an ABC overhead allocation method, overhead is allocated based on several different measures of activity called cost drivers. One important result of using an ABC system is more accurate product costing. What is another important result of using an ABC system? Better sales revenue computation, better direct labor costing, better decisions made, better direct materials costing. Better decisions made. Correct. ABC involves identifying the activities that cause overhead costs and then estimating and allocating those costs based on those activities. The result is much more accurate product costing and better decisions being made. When the production process for each different product or project or process is basically the same. Correct. A traditional overhead allocation system works well when the production process for each different product or project or process is basically the same. Manufacturing identical residential refrigerators. Correct. A process costing system is used when nearly identical units are mass-produced. As a result, all units produced during that period are assigned the same cost. A company that serves tax customers who are middle-income individuals who all have basically the same tax issues. Correct. The appropriate scenario for the use of process costing is when a company produces large volumes of a product or service and each item is basically the same. What are the three categories of manufacturing costs? Interest, taxes, and depreciation. Administrative, interest, and general, selling, and administrative. Direct materials, direct labor, and manufacturing overhead. Direct materials, direct labor, and manufacturing overhead. Correct. The three manufacturing costs are direct materials, direct labor, and manufacturing overhead. Raw materials inventory, work in process inventory, finished goods inventory, cost of goods sold. Correct. The sequence of the flow of materials costs through a production process is raw materials inventory, work in process inventory, finished goods inventory, and cost of goods sold. Determine exactly what activities cause overhead costs for each trophy. Correct. The first step in implementing an ABC overhead system is to perform a detailed study of the production process to determine exactly what activities cause overhead costs. Implementing an ABC system requires a more careful analysis of the factors that create overhead costs. Correct. Activity-based costing involves a more careful analysis of the characteristics of products, projects, and services that create overhead costs. Total manufacturing cost and total units of production would be used to assign production costs equally to identical trophies. Correct. Process costing is the use of total manufacturing cost and total units of production to assign production costs equally to identical units. The cost of raw materials that are used directly in the manufacture of products. Correct. Direct materials include the cost of raw materials that are used directly in the manufacture of products and are kept in the raw materials warehouse until used. All manufacturing costs that are not classified as either direct materials or direct labor. Correct. Manufacturing overhead includes all manufacturing costs that are not classified as direct materials or direct labor. A numerical measure reflecting the amount of a cost associated with a particular overhead cost activity. Correct. A cost driver is a numerical measure used to reflect the amount of a specific cost that is associated with a particular activity. How is overhead allocated in an ABC system? Activity cost multiplied by the basis of estimation. Budgeted overhead multiplied by expected number of direct labor hours. Sum of materials and labor cost multiplied by number of units. Overhead per cost driver multiplied by the number of cost driver events. Overhead per cost driver multiplied by the number of cost driver events. Correct. In an ABC system, the amount of overhead allocated to a product or project or process or operating division is the number of cost driver events multiplied by the overhead per cost driver. When a company produces a large volume of products using a series of uniform processes. Correct. The appropriate situation in which to use process costing is when a company produces large volumes of products or services using a series of uniform processes. Smartest reproduces custom photo albums, calendars, and stationery for customers. Which overhead allocation system should the company use? Unit-based costing, job order costing, product line costing, process costing. Job order costing. Correct. Job order costing is useful when products or services are provided in discrete units based on specific customer orders. In a job order costing system, some actual production costs are directly associated with a job or product or project, which production cost is allocated rather than being directly associated with a job, product, or project. Income taxes, sales discounts, interest, overhead. Overhead. Correct. In a job order costing system, while a job or product or project is in the production process, the accountant assigns the actual direct materials and direct labor costs and also allocates a specific amount of overhead costs. The collection of overhead costs associated with a specific overhead cost activity. Correct. The collection of overhead costs associated with a specific overhead cost activity is called a cost pool. Activity-based costing. Correct. Activity-based costing is a more accurate product costing system that allocates overhead based on multiple activities. Implementing this type of system would help Sarah's company assign overhead more accurately. There are three general types of overhead cost activities in an ABC system. What are those three general types of activities? Actual level, budget level, and variance. Materials level, labor level, and overhead unit level, batch level, and product line operating level, investing level, and financing. How is an activity rate computed in an ABC system? Budgeted overhead divided by expected number of direct labor hours. Sum of materials, labor, and overhead cost divided by number of units. Cost pool divided by number of cost driver events. Activity cost divided by the basis of estimation. Cost pool divided by number of cost driver events. Correct. The calculation of an activity rate in an ABC system involves dividing the amount of the estimated cost pool by the estimated number of cost driver events. Producing identical cans of paint. Correct. Process costing is appropriate when the units produced as a result of passing through the process centers are basically the same. for which company below is job order costing the appropriate costing methodology. A manufacturer of lithium batteries, a manufacturer of custom design furniture, a manufacturer of plastic food containers, a manufacturer of natural gas and oil products. Allocate costs with a predetermined overhead rate based on budgeted overhead costs. Correct. Using some type of predetermined overhead rate based upon budgeted overhead costs is the appropriate approach to allocating overhead costs to custom jobs.